That's an easy first question, Tom. JP Morgan is the NVIDIA of banking. They're leading with AI. They have it centralized. They say that most of their employees use it every day to save a bit more productivity. They seem strategically and operationally ahead of the pack. They do spend a lot of money on technology. They spent $18 billion this year on technology, and the amount to AI continues to increase. So they think it's real. Right. They're embracing it, and it's it starts more non-customer facing activities, but they're certainly ahead of the game.
Right. Mike Mayo with us, folks. Howard Lutnick moving from 8:15 to 8:45. Okay. Secretary of Commerce here in half an hour. Paul Sweeney.
Hey, Mike, when we came into this second Trump administration, one of the sectors that was really called out as a potential beneficiary was the financial services industry, primarily from a perspective of maybe loosening of some of the restrictions on the big banks. What have we seen? What have we learned so far?
Well, yesterday was the first ever Federal Reserve conference to overhaul regulations, specifically capital rules. And I had the pleasure to present on one of the panels. So I was back in Washington, D.C. at the Federal Reserve Board for the first time in 33 years.
Wow.
And I would say this was remarkable. This was at their headquarters building. In the front row was Chairman Powell and Vice Chairman Bowman, taking notes all day on 5 different panels. By the way, Sam Altman was the keynote speaker, and they're operating with eyes wide open to modernize bank regulation, to keep up with the times, update some stale parts of it, and to create a more level playing field with more transparency and a more holistic approach. I think that's.
What are some of the big items, Mike, that you think may be ripe for change?
Well, I think the capital rules. I mean, this is really, there's an alphabet soup of acronyms. They overlap, it double counts. It's convoluted. So I think they can make it, less complex, less convoluted. In my opening slide yesterday, I said, thank you, regulators, for a great job you did after the global financial crisis, but the rules are too confusing, too constraining, and too costly. And so to the extent that you can make them, less complex, that's important. To the extent that you can make them less constraining, I mean, banks have been marginalized. I mean, as a percentage of total corporate loans, banks have gone from 60% down to 40%. Loan growth for the last 2 years, adjusted for inflation, has been negative. And you see a lot of the loans go to the shadow banking industry. So those are some of the changes.
Mike Mayo with us here with Wells Fargo. We continue with Mr. Mayo. We welcome all of you on your commute across the nation, at home, in the office, our new distribution, YouTube. Thank you so much for subscribing to Bloomberg Podcast. Paul?
So, Mike, give us a sense of timing here. I know that, the Jamie Dimons of the world would like these rules kind of relaxed yesterday. Realistically, what's the timing here?
Well, this year is about updating the stress test. You saw that last month in terms of a little bit more clarity, a little bit more less harsh, I'd say. And the assumptions are already more harsh than the actual experience during the global financial crisis. We're not talking about going back to 2007 or those sorts of days. So that's this year, I think. Next year, there's international capital rules. That's likely to get modified. And then by the year after that, I think you should start seeing efficiency benefits. And this can be win-win-win. The regulators can win because it should cost less money for the oversight. The banks can win for more profitability, but the customers can win because that profitability, a bit of that's going to be passed on to them, and they'll have more options.